We have become just as bullish on Ether. I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. Cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets. More and more hedge funds are involved in them. So when the market corrects, we do see higher correlations these days. Although over a full market cycle, the correlation between crypto assets and any other asset is extremely low, which means for diversification purposes, crypto is a very interesting asset.
No, it's not clickbait. Cathie Wood and her firm ARK Invest really have put a shocking price target for Ethereum at $165,000. Contrarian Investor Cathie Wood has been very vocal about her bullish stance on Bitcoin and has not been shy sharing her firm's $500,000 target for the #1 digital asset. However, we have never heard of an Ethereum target until now. We knew ARK Invest alongside Cathie were bullish on Ethereum from small hints in interviews towards the end of 2021, as well as filings showing ARK had been buying up Ethereum ETFs, however they never specifically gave a price target. That all changed just this week with ARK Invest hosting the Big Ideas Summit, in which they shared how they believe Ethereum can get to a $20 trillion market cap in the next 10 years, which would put an individual Ethereum at over $165,000 per ETH. In this video, we will cover and break down everything Cathie Wood has to say about Ethereum leading up to this price target, as well as the analysis of just how ARK Invest gets to their valuation. Make sure to stick around to the end of the video where I will cover some of the latest on-chain Ethereum data to see where the price is likely to go in the short term. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and can always change your mind.
We have become just as bullish on Ether. We see the DeFi world taking off. DeFi is decentralized finance. Taking off on the Ethereum network. We see the NFT market, non-fungible tokens, taking off primarily on the Ethereum network. These are two very exciting markets for us. So yes, we're getting more and more enthusiastic about Ether over time as well. We've been evolving our point of view on Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first. But we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner Joel Monegro came up with at Union Square Ventures. Which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much like there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there. And we see that in the fixed income markets, the ridiculous rallies that have taken place, taking junk bond yields down to, just a couple of 100 basis points above treasuries. That's kind of nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. Let's see, one of the things that has struck me from the beginning, and when Chris started at ARK, which was very close to the beginning of the firm, I remember saying very early on, follow the developers, follow the developers. Well, using that metric, Ethereum is off the charts, whereas Bitcoin is steady as she goes, still increasing, steady as she goes, but clearly Ethereum, decentralized finance, NFTs have hit a responsive chord. I think bringing the creator community into this ecosystem is, helping it go a little bit viral more quickly than we would have expected. Cryptocurrencies, Bitcoin, Ether, they have corrected with the equity markets. More and more hedge funds are involved in them. So when the market corrects, we do see higher correlations these days, although over a full market cycle, the correlation between crypto assets and any other asset is extremely low, which means for diversification purposes, crypto is a very interesting asset. In our Big Ideas 2022, you will see how we break out crypto. Our understanding is evolving, and we are able to describe it in three ways: a money revolution, a financial revolution, and a next generation internet or metaverse revolution. So if that piques your interest, do take a look at our Big Ideas 2022. I'm very proud of our research. Our research is unlike anything else you'll see out there. You will see ours because we give it away. Again, unlike most other firms, meaning we give it all away.
So there's Cathie Wood with her evolving view on Ethereum over time up until today. Now, in the last clip, Cathie was referring to the Big Ideas Summit that ARK Invest just hosted, in which they put out their Ethereum price target. Now, just to give this next clip some context, the Ethereum breakdown is done by ARK Invest Frank Downing, whose main focus for the firm is on crypto assets. An interesting point is that the last analyst ARK Invest had for crypto assets' name was James Wang, and he was so impressed with Ethereum and the potential of DeFi that he ended up leaving ARK Invest to pursue work in the Ethereum ecosystem full time. If that doesn't make you bullish on Ethereum, I don't know what will. Here's ARK Invest analyst Frank Downing breaking down their Ethereum price target and analysis.
Hello, my name is Frank Downing. I'm an analyst at ARK working on our next generation internet strategy. I cover crypto assets as well as cloud computing technologies. And today my big idea is Ethereum and decentralized finance, or DeFi. As we touch on in our public blockchain's big idea, we believe decentralized finance is driving a financial revolution, bringing about a more transparent, more efficient, and more inclusive financial services. And the public blockchains that power it, namely Ethereum and its native currency Ether, have the potential for significant value accrual. Before we go deeper into the implications of DeFi, it's important to look at how we got here. The ICO boom of 2017 and 18 quickly turned into a bust, as many of the projects that had raised millions of dollars overnight failed to deliver on their promises when it came time to build. What followed was a crypto winter, which saw very little in terms of asset appreciation, but proved fertile ground for developers and those involved in the community to continue building and evolving on the technology. When that technology was ready, what followed was an explosion of growth known as DeFi summer through the second half of 2020 that continued throughout 2021. In the past year, we saw several days where decentralized exchanges, which allow for the swapping of assets on a blockchain natively, such as Ethereum, did more volume than Coinbase. Assets under management in DeFi protocols on Ethereum grew to over $100 billion, and stable coins issued across blockchains also crossed $100 billion in market cap. Combined with the emergence of NFTs, which we discuss in our Web3 big ideas, the native currency of Ether shot up to an all-time high of over $4,000 in November of 2021. While it has come a long way and shows great promise, Ethereum is still a work in progress. As mentioned earlier, Ethereum is operating at near full capacity. To meet its scaling, security, and sustainability objectives, Ethereum stakeholders have an ambitious roadmap for the future. To increase capacity, layer 2 scaling solutions, as I mentioned earlier, which compress transaction data such that more transactions can be included per block, effectively increasing throughput, must be developed and adopted. A more ambitious upgrade known as sharding, which promises to bring additional capacity online, will also induce further complexity for developers. Despite being delayed several times in 2022, Ethereum is also expected to undergo a pivotal migration to proof-of-stake consensus and away from proof-of-work. As a brief reminder, Ethereum's existing proof-of-work consensus, similar to Bitcoin's, requires those wishing to secure the network to leverage specialized hardware, in this case GPUs, to validate transactions on the network. In proof-of-stake consensus, rather than securing the network with specialized hardware and electricity, validators must post a portion of their tokens, Ether in this case, as collateral, with any adversarial attacks committed against the network, resulting in loss of that collateral. This form of slashing is the mechanism that disincentivizes bad actors on the network. The objectives of this migration are to increase both the security and the sustainability of Ethereum, both of which we have actual reservations about. Proof of stake effectively transfers influence and power away from miners and onto token holders. And this collapsing of token ownership and security has the potential to create a plutocracy where the earliest and richest investors control the future of the network. Further, detaching security from physical resources, namely the specialized hardware and electricity and proof of work mining, could eliminate natural barriers which are promoting decentralization. For example, validators in proof of stake may in fact be incentivized to host the network via a centralized cloud provider like AWS to achieve a greater uptime and a reduced risk of slashing. This, of course, is a natural vector for centralization. Lastly, as we touched on in our Bitcoin big idea, ARK believes that proof of work mining is not just sustainable, but may actually accelerate the world's transition to renewable energy. Keeping these concerns in mind, we are cautiously optimistic that they can be addressed by a careful rollout of Ethereum's 2.0 vision, particularly because Ethereum is starting from a solidly decentralized base, which is not the case with some of the other proof-of-stake networks. Ultimately, as we see more and more use cases, especially financial services functions being deployed on-chain, we expect revenue and subsequent market cap to accrue to the underlying blockchain Ethereum and its native currency, Ether. Based on the global financial services market cap, we believe this represents an addressable market of over $20 trillion in the next 10 years. Further, Ether is increasingly an important form of money in the economies built on top of Ethereum. It is the most, for example, liquid trading pair in decentralized exchanges and NFT markets, and the most common form of collateral in DeFi lending, and is also necessary to pay transaction fees. So if Ethereum were to become a significant platform powering global financial services, and Ether were to maintain its critical role as money in that economy, we expect that it could also capture a portion of the global money supply, which today currently sits at $122 trillion.
So there's Frank Downing with ARK Invest Ethereum breakdown. Now, in case you missed it, the important slide was the last one in which ARK projects Ethereum's market cap to exceed $20 trillion over the next 10 years. Now, there's a little bit of math to break down how much that equates to per Ethereum, but if you take $20 trillion and divide it by all the outstanding Ethereum, you get to a price of just over $167,434 per ETH. But it doesn't just end there. That is the breakdown for the current outstanding supply of Ethereum, which isn't static but continuously changing. What we know is that when ETH 2.0 fully launches, which will most likely be in the next few months, Ethereum is going to go from inflationary to deflationary. So 10 years down the line, when ARK expects Ethereum's market cap to exceed $20 trillion, there will be a lot less ETH on issue, making the price of one ETH much more than $167,000. Now, it's always good to take firms' price targets with a grain of salt, but there's definitely a possibility and a logical path that Ethereum could take the necessary market share away from global financial services and the global M2 money supply to fill such a high valuation. And this isn't even beginning to take into account the other use cases of Ethereum, such as NFTs or any other utility Ethereum can have. What do you guys think of Cathie Wood and her firm's Ethereum price target? Do you think it's too outlandish, or do you think they've got it right? Now, to cover some of the latest on-chain Ethereum data, we can see that throughout the beginning of this year, we have actually seen a continuation of Ethereum being taken off of exchanges despite the dip in price. What that can lead to with such a small amount of Ethereum supply left to huge wick upwards when demand increases, which is what we saw today. No matter where you stand, it's hard not to be overwhelmingly bullish on Ethereum in the long term. Anyway guys, hope you enjoyed today's video and that provided you with some value. I'll see you all in the next video, and as always, have a great day.